Hi there, good morning. Fresh week of trading and you're joining us on ET Now. This is Market Cafe. My name is Snehisha. With me is Kanishka Sarkar and well, this is a show where we are going to be taking you through everything that's happened in our markets post the closing bell on Friday, all the announcements that have come over the weekend back home as well as globally. So let's start with the global handover bit of it. And Kanishka, hi morning. Good handover from the US at least on Friday.
Absolutely. Pretty good handover, largely flattish move, but yes, a positive handover is what we are getting. In fact, US stock futures, they are mostly unchanged overnight as, Street is preparing to close out what's happening to be a strong 2025. Dow futures slipped about 18 points, whereas S&P 500 and Nasdaq 100 futures hovered right around the flat line. Now, today kicks off the first trading day of December. Investors are carrying solid momentum into the month. Last week, the S&P 500 jumped about 3.7%, the Nasdaq surged nearly 5%, and the Dow gained about 3% there. Seasonality is also attainable here in December. Historically, December has been one of those months where Wall Street records its best month, averaging more than a % gain for the S&P 500 going back to 1950. But it hasn't all been smooth sailing. November did turn out to be turbulent, with the S&P 500 and Dow finishing the month essentially flat, whereas the Nasdaq that slipped about 1.5%, ending a 7-month winning streak. In fact, at one point, the tech-heavy index was down nearly 8% from its October close as concerns around stretched AI valuations that weighed on the sentiment. Now, in terms of what to watch out for as we begin December, investors will be eyeing whether December's seasonal strength can reassert itself, how AI-related stocks stabilize after November's pullback, and any fresh signals on interest rates heading into the year from Fed. That's as far as the Wall Street is concerned. So very positive cues is what we are getting, and December has been a seasonally strong month. So let's watch out if that stands true this time around as well.
Okay, so that's on everything that's been happening with global equity. But let's take a look at what is happening on the crude side and the other commodities. Let's take a look at first what's happening with WTI crude. A sharp uptake is something that WTI crude futures saw. More than a 1% uptake is somewhere where it's trading about right now, about $59 per barrel. The big event over the course of the weekend has been the OPEC Plus decision that came in yesterday. Remember, there was an OPEC and OPEC Plus virtual meeting yesterday wherein all of the bloc's members reaffirmed their decision to suspend production hikes later into this year, which is about 1 month left. On the back of this, crude gain, because remember, when there is a curtail on supply and the demand exceeds it or is able to meet it, the prices are usually likely to spike higher, and that is why we've seen these crude gains coming in. Brent absolutely flat, but yes, WTI and WTF futures are doing very well for themselves. Remember, there was a CME portal issue because of which crude futures had temporarily been suspended in terms of trading, but that is back online now. And we're also hearing some progress on the Russia-Ukraine front, although there are limited prospects right now because we've not heard anything further or any new development compared to last week. But any clarity on the Russia-Ukraine deal front, the peace deal front also could have an impact on oil once the sanctions of Russia, if at all, are lifted off. Remember, Russia is a major producer of crude oil globally, and if that supply starts to get counted, crude prices are expected to come down once again. But overall, if you take a look at the kind of move that oil prices have seen in November, oil prices recorded a 4th straight month of a decline in November. So that is a trend that we have seen playing out for crude, and that is the pressure that we have been seeing on the crude prices as well. But while we're talking about OPEC Plus, they've kept oil output unchanged for the first quarter of 2026, prioritizing stability over market share as fears of a global supply glut grow. Brent crude is already down 15% this year, remember, hovering around $63 a barrel. The group also approved the long-debated mechanism to assess members' maximum production capacity, which is a key step towards setting new output baselines from 2027. More than 3 million barrels per day of cuts remain in place, even as 8 members paused their planned hike. So that is the latest development that we're seeing on the crude front, the oil front. But when you talk about gold, yes, gold continues to look steady, about 0.2% higher, on par for 4th monthly gain. On the flip side, you have oil that's lower for a 4th consecutive month. Gold around $4,266 per ounce. So that's a commodity handover coming in this morning.
Absolutely. So that's how the commodity markets are looking. Very important decision coming from the OPEC Plus as well. Now let's get tracking some of the top global stories as well. Now, Donald Trump has said that he's decided on his pick for the next Federal Reserve chair, doubling down on demands for faster rate cuts. Now, he's declined to name the nominee yet, but advisors say that National Economic Council Director Kevin Hassett is the leading contender. The White House insists that the pick will be based on merit, arguing cooling inflation justifies further rate cuts. Trump has also repeatedly attacked current Fed Chair Jerome Powell, whose term ends in 2026, even as the FOMC prepares for its final meeting of the year amid cooling labor data and patchy economic signals.
Okay, and shifting focus, US and Ukrainian officials held productive talks in Florida on a possible peace deal with Russia, with Secretary of State Marco Rubio saying real progress was made, but warning that major hurdles continue to remain. The discussions, attended by Jared Kushner and Special Envoy Steve Witkoff, followed a revised US blueprint that critics say initially tilted towards Moscow. Witkoff now heads to Russia for a follow-up meeting this week. In fact, let's go across and listen in to the proceedings of that meeting.
There are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow, although we've also been in touch in varying degrees with the Russian side, but we have a pretty good understanding of their views as well. So much work remains, but today was again a very productive and useful session.
All right, so that's the latest in Ukraine peace talks. But moving on, let's get you some macro data as well. Now, China's factory activity, that inched higher in November but stayed in contraction for the 8th straight month. While services, they softened as the Golden Week boost faded. The official manufacturing PMI, that rose to 49.2, with high-tech manufacturing holding in expansion, even as large producers weakened and consumer goods and equipment makers slipped below 50. Small firms posted the strongest rebound in over 6 months.
Okay, and shifting focus, Japan's Finance Minister Satsugi Katayama says the yen's recent rapid slide is clearly not driven by fundamentals, calling the moves erratic and speculative. She reiterated that Tokyo stands ready to intervene in currency markets if volatility becomes excessive, echoing a Japan-US statement affirming that exchange rates should be market determined.
All right, moving on to a more somber update. The death toll from a rare tropical storm sweeping Southeast Asia has climbed past 600, with Indonesia, Thailand and Malaysia reporting severe flooding and landslides after a week of torrential rain. Indonesia has been the worst hit, with deaths surging to 435 and entire areas of Sumatra cut off, forcing helicopters and to deliver aid. Thailand, that has reported 170 deaths so far, mostly in Songkhla, which saw its heaviest rainfall in 300 years. Now, across the region, more than 4 million people have been affected and tens of thousands displaced. Malaysia lifted storm warnings as skies cleared, but recovery efforts remain underway.
Okay, and Trump has escalated his immigration rhetoric, announcing plans to permanently pause migration from all third world countries following a shooting near the White House that killed a National Guard member. In late-night posts, he also vowed to cancel all federal benefits for non-citizens, revoke admissions made under the Biden administration, and deport anyone he described as a security risk or public charge. The comments follow an attack authorities say was carried out by an Afghan national, prompting U.S. immigration authorities to review green card holders from countries of concern and suspend all Afghan-linked applications.
All right, then moving on, Trump has downplayed a social media post declaring Venezuelan airspace closed, saying that people shouldn't read anything into it, even as the message rattled the region amid fears of U.S. military action. Trump's warning, addressed to airlines, pilots and drug dealers, caught U.S. officials off guard with no known operations underway to enforce an airspace shutdown. Venezuela condemned the remark as a colonialist threat, while analysts say that imposing a no-fly zone would require major planning.
Well, in the much anticipated and heavily teased podcast, Elon Musk says the future is clear. AI and robotics will capture the bulk of global value, with Nvidia singled out as an obvious winner in AI compute. In a candid chat with Zerodha co-founder and billionaire Nikhil Kamath, he predicts a productivity surge from AI and robots within a few years, enough to push goods and services output past money supply growth, leading to deflationary pressure and much lower real rates. Tesla remains his proof point for real-world AI, with Optimus scaling next year and Starlink and SpaceX tying into an energy plus compute vision for solar-powered AI satellites. He also expects AI-generated real-time video to dominate the internet load and live events to become scarce premium assets.
All right, then, let's move on. Now, Russian President Putin begins a two-day visit to India this week for the 23rd India-Russia summit. Now, this will be his first trip since the Ukraine war reshaped global alignments and defense supply chains. Now, Moscow is expected to firm up a new military pact. Putin, who has called Prime Minister Narendra Modi a balanced and nationally oriented leader, will also discuss regional challenges with him. Now, let's get in Sumita to take us through all that is there on the agenda of this two-day visit.
That's right. It's a big week for India-Russia ties as President Putin is on a two-day visit to India from December 4th to 5th for the annual India-Russia summit. The last time Prime Minister Narendra Modi went to Russia, and this time it's President Putin who's going to come. He's of course going to be holding a bilateral with Prime Minister Narendra Modi. Will also be meeting President Draupadi Murmu. This is his first visit since Ukraine war altered global and defense supply chains. And Russia is all set to firm up military and defense pacts with India. So that's going to be one aspect of these talks. There's going to be focus on institutional cooperation, on a defense, and of course energy. The Kremlin in fact also stated in a statement that current international and regional issues will feature in talks. From the Indian side, the Defense Secretary as recent as last Friday stated that additional procurement of the S-400s is on the agenda. There is also hope that delayed contracted projects, they will speed up as well. The other aspect of these talks is likely to be trade as well, given the fact that there is a massive trade imbalance between Russia and India. And that is something that President Putin has also addressed a couple of months back in the past as well. In fact, he also ordered his government to soften trade imbalance with India. Moscow is also working on reducing non-tariff barriers as well. So that trade aspect is going to be one key aspect as well. In fact, President Putin also stated that more agricultural products may be purchased from India. He also stated that certain steps can be undertaken from Russia's side for more purchase of Indian medicinal products and pharmaceuticals as well. In fact, mobility could also be discussed, mobility of people, Indian talent into Russia, that could also be discussed. So what's really at stake? Well, definitely there is defense. There is technology transfer and deeper joint collaboration and a deeper joint production of defense is on the agenda. The third thing to watch out for is definitely oil pricing and how India manages to balance its energy needs even as it faces pressure from the Trump administration. So definitely these are a couple of things to watch out for.
All right, thanks Amita for all of those details. All eyes are very closely going to be on Putin's two-day visit to New Delhi. But on that note, we'll slip into a very short break. Now on the other side, we'll take stock seeing on Nikkei this morning about 1.5% lower. Let's refocus to Australia and see what Australia is up to this morning, because you do have cuts of about 2/10 or 0.3% coming in on Australia this morning as well. That's ASX 200 that we're talking about. But if you take a look at how Hang Seng and Shanghai have opened up, we're doing pretty well for themselves. Hang Seng is up about 0.5% this morning. In fact, it continues to gain about 0.7% is something that we're seeing on the Hang Seng. Shanghai too on the other side is up 0.2%. So mixed day of trade coming in for our markets. Let's take a look at what the GIFT Nifty is doing, because remember we managed to close decently well on Friday. Last week is something that we've seen all-time highs on both the Nifty and the Sensex. And if that further continues, yes, because take a look at the kind of gap up we're expected to open with today, 141 points higher on the future. GIFT Nifty implying 26,529 on the spot at least. So seems like quite the optimistic open for us and a good setup to start the week with. Let's see once that opening bell goes off at 9:15 if you're able to open close to these levels. But as of now, the GIFT Nifty is indicating some optimism at open.
Absolutely. So some optimism there, because November did turn out to be another good month for the Nifty as the index ended with near 2% gains and advanced for a third straight month. In fact, the Nifty Bank and Nifty Mid Cap Index, they also saw gains for a third consecutive month, with Nifty Bank hitting a record high in November itself. Now, sectorally, IT was the top gainer in November, led by Persistent Systems and Coforge, whereas Realty Index, that was the top loser, ending the month with nearly a 5% fall. But now, as we head into December, which are the stocks that are going to be on the move today? Ashesha is here to take us through that list. Ashesha, good morning.
Good morning, and let's first start with the real estate sector, and Brigade Enterprises will be in focus, and this is because the company has gone ahead and signed the joint development agreement for a residential project in Hyderabad, and the total revenue potential of this particular project will stand at over 800 crores. So on the back of this positive development that has come in, Brigade Enterprises will be in focus today. Lenskart, meanwhile, has reported better than expected set of numbers. Revenue is up 21% YOY. Margins too have expanded to about 20% versus 16.5% same time last year. So very strong set of numbers is what Lenskart has reported. Sugar stocks, meanwhile, the likes of Sri Renuka Sugar, Dalmia Bharat will all be in focus today, and this is on the back of a negative development actually that has come in, where Uttarakhand government has gone ahead and increased SAP prices for sugarcane. They've been hiked by 30 rupees per quintal. Sugarcane being the raw material for sugar manufacturing. This is a negative development for the entire sugar sector. Hindustan Copper, meanwhile, will also be in focus, and this because copper prices have scaled a fresh record high on London Metal Exchange. In fact, copper prices have now crossed that $11,200 per ton mark. However, this will be a negative for all copper consuming industries, the likes of wires and cable businesses. So the entire pack will also be in focus on the back of this. NCC, meanwhile, on the back of some new order wins, the company said that they won orders worth about 530 crore, and this is in addition to the 2060 crore order they've already declared and disclosed to the exchange in the month of November. So some additional order wins that have come in. NCC perhaps could see some bit of positive reaction on the back of this. Arvind Smart Spaces, they've acquired a residential project in Ahmedabad, and the revenue potential stands at about 400 crores. Quick Heal, meanwhile, this is also on the back of an order win. The company says that they won an order worth about 64 odd crores. This is a 5-year government-backed contract to implement integrated cyber security solutions. Although the contract value is small, it is a 5-year government contract. Quick Heal will also be in focus on the back of this. Two other stocks in focus on the back of order wins. One is Reflex. Remember, this counter was in focus last week as well on the back of several orders that they won. They won one additional order worth about 33 odd crores. Vari Energy, meanwhile, has backed an order for supply of 140 megawatt solar modules. So yes, several stocks in focus either on the back of order wins or several other commercial launches that they've done in the quarter, and Lenskart will also be in focus on the back of strong Q2.
All right, thank you, Ashisha, for that list. But lots of stocks that we need to keep an eye out for. In fact, the list continues with Maharashtra Seamless, which is going to be in focus on the back of a big order win. It is bagged an order worth 270 crore rupees in a deal with ONGC. This is for seamless pipes, so hence this one will be in focus. Next up on the list is Tejas Networks. This one because it has received 84.9, nearly 85 crores under the PLI scheme from the Ministry of Communications. So this one is also going to be in focus on the back of this latest update. Next up on the list is Autumn Investment. This one because the board has approved 4-for-1 bonus issue of shares. So we'll watch out for how the stock reacts to this development. Next up, let's also put the spotlight on Newland Labs because this is going to be in focus. The company has announced a capex of 189 crore rupees for research and development center in Hyderabad. So we'll see how the latest how the stock reacts to this latest development. Next up on the list is Tata Tech. This one because there's been a change of guard here. The board has appointed Uttam Gujarati as the CFO. This after Savita Balachandran resigned from the position, and hence this one is going to be in the spotlight yet again. Next up, let's put the spotlight on HG Infra. This because it's one of its subsidiaries has signed a battery energy storage purchase agreement with Gujarat Urja Vikas Nigam. This is a deal for the procurement of battery storage systems worth 300 megawatts. So big development over there. We'll watch out for HG Infra as well. Next up, let's move on and get you what's the latest on Neogen Chemicals. Now, Neogen Ionics, one of its subsidiaries, has signed a major Indo-Japan joint venture deal with Morita to produce actually LiPF6 electrolyte salt in India. Now, why is this important? Because this marks a very strategic move into high-value battery materials and strengthening India's EV ecosystem as well. That's the supply chain positioning for EV. So, yes, this one is also going to be in focus, Neogen Chemicals. Next up, from the cement space, we have Dalmia Bharat. This because it's Dalmia Cement. This one because there's the latest development. The GST department has dropped 143 crores worth of tax demand for this company for the assessment year 2018 to 2019. So yes, a positive news flow here as well. And lastly, there is NACL Industries and HCC. Here, these two stocks are going to be in focus because they are going to go for their rights issue today. The board is going to mull fundraising via rights issue. So yes, all of these counters are going to be in focus on the back of either order wins or PLI scheme clearance and more as we just discussed.
Okay, lots of stocks to watch out for. It's going to be an action-packed day for us and a very energetic start to the week back home. But let's also take a look at some other cues outside of the markets to watch out for, some non-equity cues, and that's going to be the HSBC manufacturing PMI numbers that we'll be receiving for the Indian market after the market today, or in fact later in the day today. Remember, on Friday too we had the GDP numbers coming in. The IIP data was pushed to today because it was clashing with the GDP. So the IIP data is also something that we could be watching out for today, along with November auto sales, because it's the first of the month. The auto sales of the previous month, those figures will start trickling in. But shifting focus to some global cues to watch out for from the US, a whole load of macros to be watching out for. Wholesale inventories, ISM manufacturing numbers coming in, S&P global manufacturing PMI numbers coming in, and of course after their Thanksgiving and the Good Friday that they've had after Thanksgiving, Cyber Monday is going to be another festival to watch out for after Black Friday, wherein the concept is similar as Black Friday, but it's just moved online. From the UK, you have the manufacturing numbers coming in from S&P in terms of their manufacturing PMI, and from Eurozone, similarly, manufacturing PMI numbers coming in, as is the case with China and Japan as well. Like Anushka was mentioning, two stocks to watch out for, NACL and HCC, on the back of what they announce when it comes to the rights issue later today. The lock-in period is going to be ending for two important names, and the two recently listed ones. That's Vikran Engineering, wherein 5% equity comes out of lock-in, and watch out for some volatility, if at all, on Office Spaces Solutions, because 20% equity is coming out of lock-in for this stock as well. And then shifting focus, Bank of Japan Governor Kazuo Ueda is going to be speaking at a meeting at an event today, and UK PM Keir Starmer is also going to be delivering a speech at an event today. So any cues about their underlying economic strength could be found in these speeches. So watch out for all of these cues very closely today.
Absolutely, Snehi. Lots of stocks as well as cues to watch out for in today's trading session. But on that note, we'll slip into a very short break and we'll be back with more news and updates on the other side.
Of Parliament is going to be very crucial from the business standpoint. The government has listed some important bills for this session. In fact, today the Finance Minister will be introducing two key bills for replacing the compensation cess under GST regime, which is going to be lapsed from March 2026. As per the business list, the Finance Minister will be introducing the Health and National Security Cess Bill 2025 along with the Excise Amendment Bill 2025. These bills will be replacing the compensation cess under GST regime on products such as pan masala, tobacco products, cigarette, etc., which is as high as 295%. You are aware that the GST Council had already approved two-rated structure under GST 5% and 18%, which have been implemented from September 22. And there was consensus for a special slab of 40% for products such as luxury items and steel goods. At present, steel good items are attracting 28% GST along with compensation cess. But with the introduction of these bills, once approved by the Parliament, it will pave the way for the implementation of 40% GST slab along with cess, which will not be essentially a compensation cess per se. A very significant development coming in, and it is important to note that the tax incidence on these products will remain unchanged. There will be no reduction in taxes on these items, and any possibility of significant jump in taxes on these items are unlikely as well. A very significant development coming in. In fact, the Finance Minister will be introducing these key bills in the Lok Sabha today, which will pave the way for implementation of 40% GST slab along with the cess.
All right, so that's all about the winter session and what is expected from there. But moving on, India's growth engines are revving up, and how? Now, GDP GDP growth for the second quarter has come in at a 6-quarter high of 8.2%, surpassing all economists' projections. Now, the latest GDP numbers are higher than the 5.6% growth which was registered in the same quarter last year. Meanwhile, GVA came in strong at 8.1% versus 5.8% a year ago. Manufacturing stood out as the biggest contributor to the strong uptick in GDP numbers, growing at a stunning rate of 9.1% compared to mere 2.2% in the same quarter last year. India has now firmly cemented position as world's fastest growth major economy, pushing past the concerns over impact of US tariffs on our economy. In fact, on the back of these very encouraging numbers, let's also listen into what CA Anant Nageswaran had to say about the GDP numbers, which have been very encouraging.
Now, how is the momentum in the economic activity looking now that we have 2 quarters under our belt? And as MOSPI's data show, the first half of the financial year have recorded a real GDP growth of 8%. So now we can state comfortably that the full year growth will be either 7% or to the north of 7% rather than to the south of 7%. There is basically, we are saying growth rates will be at least 7% in real terms for the full financial year 25-26. In terms of investment spending, as Dr. Garg pointed out, the union government's capex grew 30.7%, and the overall investment rate more than 30% in the economy. GFCF, the gross fixed capital formation, if you look at the expenditure-wise data, that is also showing a healthy number north of 30%. IIP capital goods 5.3%, similar, more or less in the same ballpark as last year's numbers. Capital goods imports, healthy rate of 5%, and sales of listed private non-financial companies recovered and to an 8% growth rate in second quarter in the fiscal year compared to 5.5% in the first quarter, and also compared to 5.4% last year.
All right, so that's the word coming from the CEA. But moving on, Union Commerce Minister Piyush Goyal, speaking to reporters in Vadodara during the Sardar rally, lauded Prime Minister Narendra Modi's leadership for the second quarter growth rate of 8.2%. He also added that the country is moving towards the Viksit Bharat vision under Prime Minister Modi's leadership. Let's listen into his comments.
प्रधानमंत्री मोदी जी के अलग अलग जो उठाए हुए कदम है उसका हम सब अनुभूति कर रहे हैं। पिछले तिमाही में 8.2% की जो भारत की अर्थव्यवस्था में वृद्धि हुई है वो भी प्रधानमंत्री नरेंद्र मोदी जी के जो कर्मठ काम, जिस प्रकार से उन्होंने देश की अर्थव्यवस्था को आगे बढ़ाया, देश की अर्थव्यवस्था को मजबूत बनाया और विश्व में भारत की साख बनाई, उसका परिणाम भारत की बढ़ती हुई अर्थव्यवस्था, भारत में लोगों तक, सामान्य मानवी तक जिस प्रकार से आज विकास पहुंच रहा है, इस सब को जब जोड़े तो हमारी विरासत, हमारी संस्कृति को भी हमें संभाल के रखना है।
All right, so those are the comments from the Commerce Minister. But we also caught up with several economists to understand what is their outlook, what are they making of these exceptional GDP numbers. Let's take a look at what they had to say.
The number is really a blockbuster. So, of course, the full year number that we have, which is already above what RBI's own estimates are, will have to be revised upwards, because you'll now be tracking, even if you assume and take into projection the quarter 4 to be somewhat softer than quarter 3, because you will have some moderation of the front loading of exports, plus some impact playing out in terms of uncertainty relating to government spending, as your normal GDP is going to be weaker. Yet your full year numbers will probably now track a number close to 7.4 to 7.5%. That will be like way above even the higher estimate that the government, that the CA had itself put out in the early part of the year.
Interestingly, when we look at the expenditure side data, we've got yet another quarter of consumption growth, private final consumption expenditure growth being above 7%. We did expect that with the GST related boost that we got toward the end of this quarter that we would end up seeing a good consumption number.
5 minutes ago, I was very confident about a rate cut, but with the GDP numbers, I hope the RBI doesn't take this too seriously, and the MPC doesn't consider this to be a significant signal regarding the fact that economy has come out of all the problems of COVID, which it has not, certainly. So I still hope there's going to be a 25 basis point rate cut in December.
All right, so that's the outlook going forward for rate cut and what economists are making of these GDP numbers. But let's move on and get you some more news updates. First up, the India-UK joint military exercise, Ajaya Warrior 25, concluded yesterday in Rajasthan. This exercise focused on counter-terrorism operations in semi-urban environments. Next up, in a tragic incident, two buses collided with each other in Sivaganga district of Tamil Nadu on Sunday evening. At least 10 people have been
0.6% and closing positive in 6 out of the 10 years, while Nifty mid-cap and small-cap has outperformed the average gains of 2.1% and 2.8%, recording positive outcomes in 7 out of 10 and 8 out of 10 years respectively. And if we talk about the sectoral performance, then all major sectoral indices has historically remained in the green during the December. Nifty Metal up 4.3%, Nifty Realty up approximately 4%, while Nifty IT was up more than 3.5%. Have been among the strongest gainers on a 10-year average basis, which is followed by Nifty FMCG with 1.5% return, and Nifty Pharma, Nifty Energy, Nifty Auto, and Nifty Financial Services with more than 1% of Nifty Financial Services, and Nifty PSU Bank with Nifty PSU Bank and Nifty Bank with approximately 1%. And notably, Nifty Metal and Nifty IT have been closed in green at least 7 times in the last 10 years, reinforcing their strong December seasonality trend.
All right, so that's about December seasonality. Strong start is what we are expecting today as well as we start December. But moving on, November auto sales are expected to show steady year-end demand with trends diverging across segments. And Ashesha is here to take us through what the market is expecting.
Well, yes, we are expecting a strong month for auto sales, especially because of GST-led and festive-led demand uptick. So as far as the passenger vehicle sales is concerned, remember, wedding season is expected to boost demand. Commercial vehicle volumes are also expected to be on the higher side, led by operating economics that the sector is expected to enjoy. As far as two-wheeler segment is concerned, for that we are expecting inquiry conversion to be on the higher side on account of GST-led cut. As far as tractor segment is concerned, this is expected to be a laggard this time around in the month of December. Strong demand led by healthier cash flows will aid numbers, but as compared to other segments, tractor segment is expected to be slightly on the slower side this time around. So that's as far as the segment-wise performance is concerned for the month of November. Let's talk about Tata Motors then. We are expecting 55,250 units of sale in the month of November, an uptick of a solid 17% on a year-on-year basis. Now remember, for all these companies on a month-on-month basis, when we look at the numbers, they will look weak, and this is on account of a higher base. Remember, October had the impact of Dussehra, Diwali, so that is likely to weigh heavy on numbers when we compare them on a month-on-month basis. Meanwhile, Maruti Suzuki, we are expecting a 16% uptick YOY and 4% decline on a month-on-month basis. Shifting focus to some other companies then, M&M Auto, that one is also expected to report a solid growth of 16% on a year-on-year basis. So across all parameters, as far as the commercial vehicle and the passenger vehicle segment is concerned, we are expecting double-digit growth on a year-on-year basis. Hyundai, meanwhile, could be a little shy of that double-digit mark. 9% YOY growth, 66,487 units could come in for Hyundai. So that's as far as passenger vehicle sales is concerned. Let's talk about commercial vehicles then. Eicher Motors, 20% uptick YOY, this on account of GST-led demand uptick and also festive demand, which continued to aid commercial vehicles in the month gone by. Tata Motors commercial vehicle could also report an uptick of 15% on a year-on-year basis. So that's the commercial arm of Tata Motors, and Ashok Leyland could also report a solid uptick of 17% on a YOY basis. But as I mentioned, on a month-on-month basis, numbers will look weak on account of higher base. Eicher Motors RE could report 1 lakh units, which is an uptick of 23% on a year-on-year basis. This compares to Vahan data of about 1.14 lakh units. TVS Motor at par with other companies in the sector, 22% upside is what we are expecting on a YOY basis. So that's as far as the commercial vehicle category is concerned. Shifting focus to the two-wheelers then, Bajaj Auto could report an uptick of 6% YOY. We have Hero MotoCorp and TVS Motor, which could report an uptick of 23%. And about 29% on a year-on-year basis. So that's as far as the two-wheeler category is concerned. So yes, across the boards, barring tractor segment, all other sub-segments are expected to report strong set on account of GST-led cut and festive demand in the month of November.
All right, thanks Ashesha for that update. A largely steady set expected from the automakers this time around, but let's move on and put the spotlight on Lenskart, which has posted a very good set of Q2 earnings with a jump of over 20% year-on-year in the top line and a significant expansion in margin as well. And Sneh is here to break down the numbers for us.
Well, absolutely. If you take a look at Lenskart's numbers, strong show coming in the second quarter. Let's break these consolidated numbers on a year-on-year basis. Revenue has come in at 2,096 crores, which is up about 21% on a year-on-year basis. Net profit is up about 19.5%, looking healthy at 102 crores. EBITDA has grown up very smartly at about 45%. It's the EBITDA margins that also look very good on the back of a margin expansion coming in at 19.8% compared to 16.5% on a year-on-year basis. If you talk about some of their second quarter highlights, the India revenue is up 13%, international revenue has grown up by 34% on a year-on-year basis. In terms of their other business operations, they've performed 56 lakh eye tests, which is up 44.3% year-on-year. 83 lakh eyewear units were sold, which is up 20.2% on a year-on-year basis. More importantly, their first half and their quarter 2 same-store sales growth continues to be around that 15% mark, so very healthy coming in for Lenskart. They've added 143 net stores in the second quarter, totaling up to 2,270 stores in the India business. If you take a look at some of their highlights from the letters to their shareholders, they've said that the GST revision has led to purchases being deferred to October, on the back of which they're already seeing strong demand in quarter 3. Tier 2 revenue per store is as healthy as Tier 1, and in fact profitability is even better than Tier 1. So this is optimistic for them, because if you take a look at what their Tier 2 store addition has been, 791. A bulk of their stores in the second quarter has been added in the Tier 2 cities in India. They're targeting 450 net store addition in FY26. They've reached the exact halfway mark at 225, so they seem well on track, and they're going to be launching B, which is the company's AI-powered camera smart glasses, in quarter 4. Now these smart glasses, the first phase, will be able to do things like UPI payments, health monitoring, food logging, photo and video capture, as well as real-time object scanning, translations. So this is something that the street is going to be excited about. Lastly, if you take a look at some brokerage reactions coming in, remember Ambit was the first one to initiate a sell rating with a target price at 337. Last week, Jefferies had initiated a buy rating with a target price of 500. This morning, they have reiterated the buy target with a 500 rupee target price, saying that the second quarter marked the onset of the company's compounding phase as tech and supply chain unlock a leverage going ahead. So that is positive coming in, and a thumbs up from Jefferies on the healthy second quarter numbers. That's the take on Lenskart quarter 2. Very good set of numbers.
All right, so very good set of numbers from Lenskart. Brokerages are positive too. That's the update. Thanks, Nehi, for taking us through all of that. But now let's put the spotlight on the sugar sector and see what's happening there. Now, Uttarakhand has announced that the state advised price for sugarcane for 2025-2026 crushing season has been fixed at 405 rupees per quintal for early maturing varieties and 395 for normal varieties. And Ashesha is here to take us through what this really means for the industry.
Well, yes, negative news coming in for the sugar sector, because Uttarakhand government has gone ahead and hiked SAP, or state advised price, for sugarcane by 30 rupees per quintal for the current sugar season. So the revised price now stands at 405 rupees per quintal for early maturing varieties versus 375 earlier, and for new varieties it has now been fixed at 395 rupees per quintal. And as I mentioned, this is a 30 rupee per quintal hike that has been done for the current sugar season versus the last sugar season. Now remember, the industry had been seeking increase in sugarcane price, especially the farmer community. But remember, this is a negative for sugar sector, because sugarcane is a raw material that is used for manufacturing of sugar, and hence this will be a negative, and the sector is expected to remain in focus today. But remember, this is not the only ask. The sector has also been seeking increase in minimum support price for sugar, which remains unchanged for the last 6 years, and the sector is also seeking increase in ethanol prices. So these are the two main asks now
the sugar industry has from the government. For now, negative news coming in, increase in SAP price of sugarcane from the state of Uttarakhand. The entire sector will be in focus on the back of this.
All right, so entire sugar sector is going to be in focus on the back of this latest development. We'll watch out for how the sugar stocks react. But with that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere. The market coming up next.